It is true we have volatility, but it turns out that the company is much easier to manage today than it was before. Today we have $15 billion of Bitcoin, and it could be worth an extra billion or a billion less in any given hour. But
Hello everyone and welcome back to Finance Wolf. In this video, Michael Saylor talks about cryptocurrency and Bitcoin. The nature of the game is that if oil production were to be cut in half in 2 weeks, one would expect the price to rise accordingly. There won't be more than 450 Bitcoin available from natural sellers. Natural buyers are people looking for a safe place to store their life savings and preserve their capital, and many of them will likely hold onto their Bitcoin for a significant amount of time, typically even a decade or indefinitely. However, because spot ETFs have been approved, more people are entering the market. On the other hand, miners are the ones selling Bitcoin, which determines supply and demand, among other things Michael Saylor covers. Please watch the video through to the end, like and share it, and subscribe to our channel Finance Wolf.
4 years ago, we had $500 million of cash, and there was no chance we were going to have more than $500 million in cash. So I'd rather have the capital and have it volatile than not have the capital. It's kind of like saying to the richest man in the world, you know, you made $50 billion last month, but you might lose $20 billion next month. Is that stressful?
Yeah, I get you.
I think you'd rather be
Yes.
the richest man in the world and lose 20 billion next month than have $20 and not have to worry about losing anything.
Yeah. We are a couple of days from halving. Everybody's talking about it. How do you see it? What are your expectations about the halving?
The natural sellers in the market are miners who are selling to cover their interest expense, to cover their electricity bill, and for capital investment purposes. And right now they sell about 900 Bitcoin a day. That works out to be about $65 million a day. At the halving, it'll be only 450 Bitcoin a day, so 32 million a day of selling. The significance of the halving is it's kind of like if Warren Buffett said, I'm going to buy $9 billion of Bitcoin every year for the next 4 years, starting on April 20th. That's what the halving is. You can look at it as it's a natural demand for $35 million worth of Bitcoin a day, every day for the next 4 years. Or you could say Bitcoin is a market where there's $18 billion of supply available, and there's a demand that's more than that, but in a couple of days, there won't be 18 billion in supply, there'll be 9 billion in supply.
Yeah.
So if I told you I was going to cut the production of oil in half in 2 weeks, you would think the price would go up.
Yes.
And so that's the significance of the halving. There's not going to be any more than the 450 Bitcoin available from natural sellers. The natural buyers are people that want to store their life savings. They want a store of value, and they're wanting to save their capital. And when they buy, they'll buy and hold it for a decade. Maybe they'll hold it forever, but they'll hold it for a long, long time. And a lot of them are coming into the market because of the approval of these spot ETFs right now.
Yeah.
So they're the buyers, the miners are the sellers. The supply demand is the demand is going to increase. The supply is going to decrease. The price will have to adjust to find marginal sellers that want to sell at a higher price. You know, and if he wasn't in his 90s, if he was in his 60s, he probably would spend the time to learn it, and he'd be a big Bitcoin believer. Because Warren Buffett is an adherent of the buy and hold strategy, the HODL. He's probably the most famous hodler of his generation. He bought Coca-Cola and he still owns the stock. He would buy companies and hold them for 30 years. He said he's very famous for this phrase, if I wouldn't hold it for 10 years, you shouldn't hold it for 10 minutes. And that's the Bitcoin idea too. Buy something you're going to hold for 10 years. I think that people that get asked about Bitcoin but have only spent an hour studying it or a few minutes, they just misunderstand it. And because they misunderstand it, they're goaded to criticize it or dismiss it out of hand just because they misunderstand it. Most people that are skeptics or cynics. They think it's a currency that's going to replace the dollar and replace the banking system or replace, governments. And on that basis, or they think or they confuse it with crypto tokens that are securities. And they either think it's a scam or they think it's a threat to the dollar. If you study it deeper, you realize it's property. And once you think of it as it's a digital building or it's digital property, I'm buying it instead of buying an apartment to rent out as retirement income, or I'm buying it instead of buying a building, or I'm buying it instead of buying an acre of land because I want to store my savings for 30 years. When you think of it like that, it becomes non-controversial. And I think if somebody said to Warren Buffett, I'm thinking about buying, a Bitcoin instead of buying an apartment to rent out.
So
what do you think? I think he would have a different reaction.
Yeah.
But you can't look to people, at the end of their career to embrace a new idea. When I'm 90 years old and you ask me about the telepathic implants that the teenagers are 100 hours studying Bitcoin, I don't think there is anybody in the world that spent 100 hours studying Bitcoin that's critical of it.
How many hours did you spend studying the currency?
I think when I looked at it for an hour or 2 or 10 hours, I thought, in 2030, I said, maybe it's going to go the way of online gambling. Maybe it'll get banned. When you spend up to 10 hours, you think, oh, maybe, and you're skeptical. But when I got to 100 hours, I started thinking, hey, this is better than gold. This is a really good idea, a digital asset. And when I got to 1,000 hours, I realized that this is probably the best asset. And then somewhere past a few thousand hours, you start to conclude this is an instrument of economic empowerment. This represents property rights for 8 billion people. This represents the singularity where engineering and science and mathematics crashes into economics and politics. And now economics is going to be a science or an engineering discipline, not an art or a pseudoscience type discipline. Invest as an individual. And I think if you're an individual investor or you're a family, Bitcoin makes a good treasury asset. You can build a family on it. If you want to store assets for 100 years so your great-grandchildren are able to live well on what you've earned in your life, then Bitcoin is, I think, my best idea for that. But the reason that my company did is my company had to do something. We either needed to sell the company. We were gonna have a fast death, a slow death, or we were gonna actually adopt a new idea. And so we did it in order to save the company, in order to assure the company's success. And I think Bitcoin can be used to back a company. You can use it to back a bank. You can use it to back a family. If you have a charity or a religion or any nonprofit organization, you need an endowment. Think about the endowments at universities, right? The real issue is, what are you going to invest? Do you want a big endowment or a small one? You want a big one. Do you want your endowment to go up 30% a year or 20% a year, or do you want it to go up 2% a year? You want it to go up 30% a year. So Bitcoin represents an endowment to my corporation. I think it's a little bit unique because most companies operate without the idea of an endowment, right? Conventional corporate wisdom is you should give all your capital back to the shareholders or dividend it out, and you should run with no capital in your treasury. Or treasury assets are a liability. So corporations are encouraged to hold cash or hold sovereign debt. But the problem with that is that those things don't beat the cost of capital, and so they're deemed to be drags on shareholder value. And hence you end up with corporations borrowing money to buy the stock back to leverage up earnings per share. And the problem with that is when you have one bad quarter and you can't make the debt service, the company fails. It goes bankrupt. And so the analogy I would offer you is if you ran a university and you had a massive endowment, billions of dollars, if I said to you, here's my idea, give all the money back to the alumni, raise the prices of tuition, double the number of students in the class, and tell all the professors you're going to cut their salary. And if they complain, fire them and hire new people.
I would say you're crazy.
That's how corporate playbooks work, though. Yeah, it's crazy for a university, but for your company, I would say, oh, you have a lot of money? Buy back the stock, borrow some more money, lower your cost, tell your employees to work harder for less, raise the price to your customers, work harder.